Today on Forbes, how a $500 million cash infusion from Wall Street adds billions to Ripple's founders' net worths. Crypto conglomerate Ripple has raised $500 million at a $40 billion valuation, led by funds tied to Fortress Investment Group, Citadel Securities, as well as Pantera Capital, Galaxy Digital, Brevon Howard, and Marshall Wace. The deal follows a $1 billion tender offer at the same valuation and lifts co-founder Chris Larson's net worth to an estimated $13.8 billion, up from $10.2 billion. CEO Brad Garlinghouse also joins the billionaire ranks, with an estimated $3.5 billion fortune based on a 6% stake in the company and XRP holdings. Arthur Brito, one of the XRP ledger's creators, is likewise a billionaire. He holds at least 1.3 billion XRP in wallets tracked by Grey Wolf Analytics, valued at roughly $3 billion. In a statement on Wednesday, Ripple said, quote, "The decision to accept $500 million in new common equity reflects the strategic value of deepening relationships with financial partners whose expertise complements Ripple's expanding global suite of products." Ripple, in fact, didn't need the money. It sits on about 35 billion XRP, worth roughly $80 billion at Wednesday's $2.27 price. Those tokens, representing more than 30% of XRP's total supply, are released from escrow each month, giving Ripple one of the most lucrative self-funding mechanisms. The company initially pitched XRP as a, quote, bridge currency to replace SWIFT and streamline cross-border payments. SWIFT is a secure network connecting banks worldwide, created in 1973, that enabled them to handle international transactions. Ripple won splashy partnerships, including with MoneyGram in 2019, yet struggled to convert attention into sustained usage of XRP. Last year, it earned a spot on Forbes' list of, quote, zombie blockchains, decentralized projects with grossly inflated valuations despite limited adoption and scant transaction revenue. Then came the regulators. In 2020, the U.S. Securities and Exchange Commission sued Ripple for selling XRP as an unregistered security. The 5-year legal battle ended in August with a $125 million settlement. Rather than retreat, Ripple spent. Over 2 years, it has executed one of crypto's most aggressive acquisition streaks, buying GT Treasury, a treasury management software provider, for $1 billion, prime broker Hidden Road for $1.25 billion, stablecoin infrastructure platform Rail for $200 million, and custody firms Medico for $250 million, and Standard Custody for an undisclosed amount. So far, it's working. Ripple says its payment volumes have surpassed $95 billion, and its RLUSD stablecoin, launched in December, just crossed $1 billion in market cap. It's already being used as collateral on Ripple Prime, the rebranded Hidden Road business, which was clearing roughly $3 trillion a year across 300 institutional clients before the acquisition. The brokerage is also expanding into collateralized lending for XRP, according to the firm. In the end, survival often proves the best trade. Thanks to its loyal fanbase that continues to support XRP's lofty valuation, the blockchain company that once promised to reinvent global payments has taken a detour and bought itself some serious plumbing along the way. Still, it's questionable whether the hodgepodge of businesses held by the crypto conglomerate justify the $179 billion valuation currently being afforded to Ripple and its token. The next big question for Ripple is whether it can turn its acquisitions into a unified system that actually drives value back to Ripple's core technology, the XRP ledger. While the XRP ledger may still lag behind more popular blockchains in terms of app usage and developer activity, it is clear Ripple the company is a very different beast than what it was just a year ago. Joe Nagar, CEO and CIO of crypto hedge fund Feynman Point Asset Management, which is also an investor in Ripple, says, quote, "Sometimes people view change as bad. I think that's actually a sign of health and greatness, especially in emerging technologies." For full coverage, check out Nina Bambasheva's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.